Investing insights with Right Property Group, exploring trends in real estate and helping property investors gain financial security.
Hello everyone, and welcome to Property Investing Insights, the place where you get all of your property insights, hence the name, and all of the tells of being a successful investor and how to navigate the current market. And today, I've actually got an ex-client over here. And you sort of would think, why would I get an ex-client on this podcast? You'd want to see and hear from current clients. But she's crossed over to the dark side. She's joined us a few years ago. And of course, I'm talking about none other than Maxine Roach, a pillar of strength and dependability at RPG. Often challenges me on properties where I think it may be okay. But she then dives deep and does the research and says, no, Vic, I think you're wrong. And here's why. And I thought, you know what? Let's unleash her to our listeners. So Maxine, welcome.
Thank you very much for having me.
No worries. And it took a while, right? Because I had to drag you here, kicking and screaming.
Maybe, just a little.
And so we'll dive straight into it. And of course, you've been a RPG client for a little while, and then
Yes.
I think it was just before COVID that we reached out and he said yes, and the rest was history.
Yes, we went into lockdown, I think, the week after I said yes.
Yeah.
Which was, a huge hurdle to get over.
Mhm,
But I'm not one sort of, to let things get to me. So it was like sink or swim.
Yep, absolutely. And literally it was because we were, we were all learning how to work remote.
Yes.
And business had absolutely exploded at the time with the number of appointments I had to do per day, which left very little time to really truly mentor you. Although I had mentored you over the period while you were a client, right? Yeah.
That was the benefit is I had been on the other side and I knew what to expect. So jumping ship, as if you like to call it that.
Going to the dark side.
Going to the dark side. I'd been in the client's shoes, so I knew what to expect. And then, just having to learn, how to deliver it properly and making sure all the research was done correctly.
Yeah.
And, the rest is history, I suppose.
So let's talk about background a little bit, right? So you've been in real estate, you dabbled in real estate on the sales side for a little while.
Yes,
and
I
what
did.
were you doing before that?
So, believe it or not, but I'm a hairdresser qualified by trade.
Really? No, I did not know that.
But I found very quickly that really wasn't my thing. So I did a few different jobs.
So you just couldn't cut it?
Pretty much.
Yeah.
I couldn't cut the conversations of listening to everybody's problems every day.
Yeah.
I felt like a counsellor, I think, most days, because it's amazing what people will tell you in a hairdressing chair.
Yeah.
So, but once I had my children, that really dictated what job that I was doing, because I always wanted to be a real estate agent. But it's a very, very time-consuming job. It's nights, it's weekends, and I didn't want to be away from my children. I wanted to be there for them when they grew up. So I really had jobs that would allow me to be a mother, be at home in the afternoon. I worked night shift. I did all sorts of things really just so that I could be there for my kids. So I put my children first. Would I change that? Absolutely not. They have grown into two, really well-balanced children. Well, they're not children anymore. They're adults.
They'll still be kids to you.
Absolutely. And so once they were actually grown up, I got the chance. I sort of thought, what am I doing? I was in a job that I really wasn't enjoying. And I thought it's time for me to do something for myself. So I decided to go and get my qualification as a real estate agent. At later on in life, it's not easy to change careers when you had no experience. Although I had it by that time, you had taught me everything that I know about property investing. So I took a chance and I got my qualifications. Nobody wanted to give me a job because
It was a big risk.
It was a
wasn't
big risk.
Yeah.
I was too old, and I had no experience. So to get some experience, I contacted a friend and said, "Can I come and work with you for free on Saturdays so I can learn the lingo, learn the CRM system so that when I'm going for an interview, I know what I'm talking about." So I did that for a couple of months, and that was a really good experience.
Yep.
It didn't matter to me that I got paid, because I actually got paid in far more than what a dollar value could give me.
You got the knowledge.
I got the knowledge. So the very next interview that I went to, I managed to talk my way into that door. I had to start at the bottom.
So when you say start at the bottom, what do you mean?
Which was a reception role.
Right.
In a real estate office. Not long after I started, that office expanded, so I became office manager for 2 offices. Then I sort of saw, I'm not really going anywhere here. I don't want to be an office manager. I want to be more on the sales side. So I applied for a job that I wasn't qualified for. But
there's a trend coming out here.
but I knew a little bit about a lot. So I talked my way into the next job.
Yep.
Which was assistant to a very high-profile agent on the North Shore. And the first job that I had to work on was on a $10 million job.
Right.
And it was a case of sink or swim.
Right. Which you tend to do on North Shore, right?
Yes. So fortunately, it did actually turn out to be really well. It was just a learning experience. And then I was doing that job for 9 months, I think. And then I saw RPG was looking for somebody.
Yep.
And I thought that's really what I wanted to do. So, the rest is history.
Yep.
The last 3 years.
So you talked yourself into a job with RPG, right?
I did, actually. Yeah, and once again, it was sink or swim.
Yep.
But
yeah, pretty much, and it wasn't by design. Circumstances made it sink or swim, right?
It was, yeah. So, and I'd have to say I've never looked back. I love my job, love what I do, helping people. And it's the best job that I've ever had in my life.
You know, guys, that she's angling for pay rise by saying that, right? So let's talk about your investing journey, right? Obviously, you're dabbling in property before RPG, and how did that pan out, and what was the education pieces you gave yourself along the way?
So the very first property I decided I wanted, because I always had an interest in property. And I was at a barbecue once, and I heard this couple talking about that they had bought an industrial unit.
Right.
And I thought, that's really interesting. Those numbers really sound good. And it just so happened that my uncle owns a industrial real estate. So I seeked advice from him. He's a very experienced investor. Having said that, I made every mistake in the book. I bought an industrial unit off the plan.
Which year was this?
This was in 2004.
Okay.
I think.
Yeah.
But I sort of, my uncle is an extremely successful investor, and I thought, well, if he's buying 3 units in this block, it must be okay. So that was the extent of the advice I got.
Yep.
I did get very lucky. By the time it took 18 months to build, by the time it settled, it had doubled in value.
Right.
But the long and short of that story was, if something had gone wrong, I would have lost my house, but I would have had a shed to live in.
That's right. So you're overexposed from a potential devaluation down the track, wasn't it?
Yes.
As it was being built.
Yes, and I used my house to as collateral to borrow the money. So my uncle said to me, he goes, "There's one thing that's really good about investing industrial. There's only 3 walls and a roller door, and nothing can be damaged except those things." And lo and behold, the tenant that was in that I got in that unit drove his car into the roller door and it had to be replaced. But so it did actually work out. Sort of that was my first experience.
Yep.
Then I thought, no, we need to keep going on this investing experience, and I did seek some advice from my broker, and I was actually going to buy a unit. And he said, look, I think...
This is all in Sydney, yeah?
This is all in Sydney, yes. So he invited me to come along to Right on Track at Rose Hill. This was 2016.
Yep, which we've just restarted this after October 2019. This was the first one done in beginning of September 2024. So we are talking, though, back in 2016. Yep.
2016 that was. I was introduced to you. And from that night, I knew that I was in the right place. In fact, I actually went home and I said, I wonder how I could get a job with that company in 2016.
It took you that long? What took you so long?
But of course, then I was introduced to you. You taught me everything that I know about property investing. I went along to the Right on Tracks. I found that they were extremely valuable, going in and listening to you talk, really understanding the investing process, how it actually works, how to build a portfolio, how to borrow money, everything from A to Z you taught about in layman's term. It wasn't sort of, being explained, sort of that you couldn't understand. Everybody that walked away from that room, I felt, got something out of those talks. And that really gave me the confidence to push forward and buy. I think I bought 4 properties with you within an 18-month period. Then we got capped out, couldn't borrow any more money. But that first one, buying that first property, was the hardest of getting over that fear of, am I doing the right thing?
Yep, and will it work out or not?
And will it work out? Yes. So yes, and then I did actually go on to buy one other property on my own. So I think the portfolio was 6 before I got sort of, couldn't buy. The broker said, sorry, but no more money.
No more.
And then, of course, the lending criteria changed, and that was sort of our, consolidating period.
Yeah. So it was a forced consolidation at the time,
it
right?
Was.
And in the meantime, all these properties were going up in value.
Yes.
Yeah.
Yes, certainly was. So we ended up, I think, with 2 in Victoria. I had 2 in New South Wales and 2 in Queensland.
Right, so well balanced.
And, very well balanced.
Were any of them development sites or curly properties?
Yes, so we had 2 units, 2 properties in Queensland. Both of those were granny flat sites. I do remember the one which I thought, oh, Victor, what are you doing here? It was cosmetically challenged. It had previous termite damage, which everybody, runs from because, it frightens them. But it actually opens up opportunity. Now, I used to call that property my dump. But it was the best performing property in the portfolio.
There you go. Yeah.
So when I purchased it, the tenant had been there 11 years. The kitchen was really bad. I thought, it really needs a new kitchen. And you said to me, do not spend money that you don't have to.
Yeah.
Now, to this very day, that kitchen has never been replaced. All I do is make sure that it's functional. The tenant is happy with it.
Yep.
It might not be to my standard, but they are happy with it.
But it's still minimum standards in terms of livability and all that, right? So it's not a slum.
It's not a slum. So
it's just not pretty.
It's just not pretty. And one thing that I can say to people is, don't chase the pretty property. Chase the opportunity. So if that tenant was to move out, I could totally go in there and do paint, carpet, blinds, replace the kitchen, and the equity that it would, increase so much on that property that it's definitely well worth it.
Yeah. So often when we're investing, right, and this is where people want to do too much in the front end, is that we want to let the market do its thing first, and then we do our thing, which is the renovation at that point in time. Unless, of course, having having the renovation done in the early stages assures you of better quality tenant, or it's addressing the safety issues in the property, right? So this is one of the conversations we had all along the way, is now don't spend money unnecessarily.
That's correct, because it already had a tenant in there.
Yeah.
So I would have had to remove the tenant just to replace the kitchen.
Yeah.
Now, I never ever thought of myself as a slumlord. If there was any maintenance issues that ever needed to be done on any of the properties, I always took care of that, because if you don't, it can become a bigger problem later on down the track and cost you a lot more money.
Yeah. So what were some of the hairy moments of this journey?
It's actually property management. Property management is extremely important. You need a good property manager, and cheap is not necessarily the best, because you get what you pay for. So the other property that I had in Queensland, much better house, big granny flat site, over 1,000 square metres on that one. But the tenants were screened. I thought, yes, they were teachers, they had good jobs, I thought they'd be really good tenants. But every month I was getting some sort of maintenance issue with regard to block showers. It was just going on and on and on. And I thought every month this was happening. Then I got an inspection report and I saw the photos, and that really
taught you a lesson.
It taught me a lesson. You must really, when you get sent these reports, have a look at the photos, read through it, see what the comments were. I got straight on the phone to the agent and said, I'm really concerned about the state of the property. Her response to me was, you can't tell people how to live. And I thought, there's something here that's not right. So I jumped in the car and I drove to Queensland.
Right.
And
Big drive.
It was, but it was worth it. So from the moment she opened the door, the stench that came out of the property and the state of the property, I thought, if you think that this is okay, I need a new property manager.
Yeah.
So I issued notice to remove that tenant. I actually went up there myself and spent 2 weeks cleaning up the property and fixing all of the issues. I think we took something like 1,000 kilos of green waste out of the backyard alone.
Right.
Just trying to tidy it up. And then I got a new property manager, and I've never had another issue with that property again.
Yeah.
So if you find a good property manager, hang on to them with both hands. It may cost you, a little bit extra in money, but it's going to save you a whole lot of money down the track.
Yeah, absolutely. And with COVID, the way we've moved with technology and all that, the advice previously was don't have your property manager too far away from the property. But now you can, within reason, have them in the other side of that suburb, and still be able to manage it effectively.
Yes, that is correct. So that was probably the hairiest moment that I had with that one. But yeah, it's just really making sure. I think I had your help, so I made really good decisions. So I didn't get caught up in my own head, trying to analyse a property. I had to trust that you knew what you were talking about. And so, little be known, you do. We really didn't have too many curly properties. I suppose with my experience with the industrial unit, if you're going to go down the line of commercial, you really have to make sure you've got a buffer in place, because a commercial property can often sit vacant for a long period of time. So I know that there was one period we had the unit was actually vacant for 3 months. Other than that, we were very lucky. We would seem to be able to secure tenants.
Yeah, so it was well located.
It was well located. It was, really close to the M2 in Sydney. So, and it wasn't too big. So a smaller business was always, they're just starting out, was always willing to rent that
Yep.
property. But commercial people think that's, got a higher return, but there's also a higher risk.
That's right. And you need to do the figures truthfully, right? So it's you
Absolutely.
need to take the vacancies into account. You need to take into account that potentially you've got a higher interest rate on that.
Yes.
And your management fees are structured differently as well.
That is correct. And then you have to bring in the fact there's more admin work to do on it because there's GST involved. So every quarter you need to submit a GST, a BAS statement for it.
Yeah.
So you need to be prepared to do the work.
Mm-hmm.
But yes.
So with the journey that we've gone through, what would you have done differently? If everything was possible, what would you have done differently?
If only I knew what I know now at an earlier age.
Mm-hmm.
So I was brought up in the era, where your parents taught you work hard, save, pay off your home, which is, there's nothing wrong with that. But if I had started my property investing journey 20 years earlier, then I would be in a very different position than I am today.
Mm-hmm.
But so that was my experience growing up, and I didn't want my own children to grow up with that experience.
Mm.
So my kids have grown up with property investing. And in fact, I think at the age of 11, my daughter said to me, "Mum, are you addicted to buying houses?" So I had to explain, well, no, this is a way...
This is not clothes shopping.
This is not clothes shopping. No, there's a difference between a good debt and bad debt.
Yep.
And this is good debt, and this is going to secure our future for later on in life.
Yep.
And because they had grown up with that, they didn't know any different. So both children at the age of 21 were able to buy their first property in Sydney. So they have their foot in the market.
Yeah. I remember your son grabbing a property in the southwest corridor of Sydney, right?
Yes.
And we facilitated that too, and he's manufactured immense equity.
He
has. I think you, if I remember correctly, you're telling me that his friends were not either still in party mode, whereas he was in accumulation mode.
That is right. Well, it's so much so that they call him and his girlfriend Mum and Dad, because he sort of he put himself out there and he did buy a property. He doesn't live in it, and neither does my daughter. They're rent investors. They still live at home and with mum.
Yep.
And sort of, and why would they want to go anywhere? Because mum's motel is first class. But they have their foot in the market, and having a mortgage at a young age of 21, they save their money. It wasn't the bank of mum and dad that helped them get into those properties. They used the first home buyers grant. But they grew up with that, so it was the norm to them. Yeah. And my son, both of them done very, very well. There's so many of my friends say, our kids will never be able to afford anything in Sydney, and it's not possible to buy a property in Sydney, but it is if you use the right tools and you sort of go down the right track. It's sort of the property that they buy may not be the property that they want to live in, but it's better to be in the market than not in the market.
Yeah, absolutely. And just to clarify, with the first one's grant, they did actually live in the property for a little while.
That is correct, yes.
And so they satisfied legislation, and then, of course, Mum extended an olive branch and they came back home, right?
Yes. So my son, he's an electrician, so he actually used the 6 months period to actually fully renovate the home. Now, because he's a trade, he could do a lot of the work himself. He had friends that came in and helped him. I think he spent $20,000 on doing the renovation, but that increased his equity by $120,000 just within the 6 months period. So that's an example of being able to force the value of the property.
And he couldn't have saved that money fast as he made it, right?
He couldn't. And recently we did his tax return, and I asked him, how much do you think that property cost you out of out of pocket. And he was mumbling away and grumbling, because the interest rate had gone from 2% to 6%. And when it sort of all washed out, I said, really, that property only cost you $3,000 to hold.
For the year?
For the year.
There you go.
And he goes, oh, really? And I'm going, yes. I said, that was after he took the tax benefits into it.
Yep.
And then I was researching that suburb for another client not too long ago. And I thought, wow, that property has really increased again in value. And I sent him a valuation on the property. And that really puffed his chest out and thought, it's really worth paying that interest rate. And I'm, maybe they don't have as much money as my friends to go out and party sort of every day of the week, but look what I've got to show for it.
Yeah, he can party lifelong, right?
That is correct.
Yeah. So with that property, you didn't actually pay substantially below market, right? It was on market for its condition and what it was, right?
It was. It was market value at that particular point in time, because it was during COVID when interest rates were 2% and the market was going crazy.
Yeah.
So we didn't buy that under market value. We bought it off market so that we weren't competing with the market. But you
paid fair value for it.
We paid fair value for it, but it's sort of we could see the opportunity in the property, and later on down the track he could probably build a granny flat on the back of that.
Yeah, and I guess when you look at clients in general and investors in general, right, this is one of the biggest hurdle is trying to put their foot on the throat of the vendor and say, no, I want to get it at the cheapest price possible. Fine, but then they're losing the opportunity just for the sake of a couple of $1,000s, right?
Absolutely. So sort of sometimes people think, well, I don't want, they'll lose the property over $5,000, but in actual fact they're probably buying, I think last week I had an example of this, they're buying under the market, but they still lost the property over $5,000 because they thought, no, I don't want to spend that money. It's not that the property wasn't worth it, so they've actually lost out on the opportunity on that property and buying the property still under market value for $5,000.
Yeah.
And $5,000 in the big picture is nothing when you're talking about property of what you're going to gain from it.
Yeah, so if we flesh that out a little bit more, so the scenario was that, and I'm making these numbers up, so let's say that we're negotiating it at, say, $600,000, which we thought was a really good value and worth paying that amount, yet the vendors come back at say initially at 610 as an example, and we've negotiated down, met them halfway at 605, but the investors basically said, no, 600 is my figure. Yet fixing that property's problems, because it had some cosmetic problems, fixing that problem would probably make it worth around the mid sixes to high sixes, right?
That's
so we've
correct.
lost that bit because we got caught into in a mindset game of I've put my foot down at 600, I will not go up anymore.
That's right.
Whereas the vendors conceded and come down to 605, and that's actually below what it should really sell for.
That is correct. So that $5,000 in fact has cost that investor way more than $5,000.
Yeah. And the same token, and the other side of the coin, we don't want to overpay for a property just because you fall in love with it.
Oh,
right?
absolutely not. So there's one thing I do like is the negotiation.
I know that.
And I will work very, very hard to get the best possible price for the client. That's what my job is.
Yep.
We don't go and just because the asking price is X amount, that doesn't mean we're going to go and pay that for it. We always try and negotiate a really good price on a property.
Yeah. So let's explore that a bit, right? So often, we depending on which market we're playing in, which state we're playing in, it could be well below the advertised price, within the range, or there are times where we actually pay above the asking price, because we're seeing far more opportunity on it, and the competition on it is fairly fierce, but it's still worth buying, and there's still a get out of jail card on that property.
That's right. So that get out of jail card is really important.
Mm-hmm.
And as long as it has, those opportunities later on down the track, then if you're paying an extra $10,000 for the property at that particular point in time, you're still going to be way better off because of the opportunities that property can create for you.
Yep. And I remember back in my portfolio back in I think it was 2010. We were negotiating on a block of 4 units in the Wollongong area, and there were quite a few people actually negotiating on it. And at that time, it wasn't the norm to pay above listed price, right? And I went in with my first offer, 30K above listed price, right? And I jagged it, but I'd done all my research in how easy it was to actually strata subdivide this block and what the end value was going to be. And I reverse engineered my figures to say that even if I put 30K more than what they're asking, I'm still way ahead in terms of the end value within that year in that sense, because I was ready to pull the trigger on the subdivision. And it was a really easy way to get rid of the competition because I was playing a psychological game, but still within our means.
That's right.
Yeah. And we would do that often with quite a lot of agents, except some areas we actually do reverse psychology where we go really low.
Yes. Yes, and I had an example of that this week where the price ended up being $50,000 under the asking price. But, I just presented my case of why I think that, we should be paying $50,000 under the advertised price. And, the agent worked with me and, I put forward such a strong case that he really couldn't argue.
Yeah.
And he's put that to the vendor and, the vendor goes, agreed, okay. So, and this was actually on a block of 3 units.
Yep.
3 separate strata titles. So they were thinking that they were going to go and sell them individually and get a lot more money. But if you actually look at comparable sales, it's very, very clear that that wasn't going to happen. It was just another agent talking her up, trying to buy the listing. Yeah. Which, buying the listing is what a lot of agents
That's true.
will actually do.
That's true. And in this case, we had really researched that what they were asking for was sort of okay, but we used a lot of data and we used a lot of recent sales and past sales to have that argument with the agent without locking horns.
Yes.
Right? And then it's the agent then going in to convince the vendor, right?
Yes.
And I think one of the things with negotiation that most people get wrong is they antagonize the agent.
Yes, where more it's about building a relationship with the agent. So we have bought several properties with this agent, so he knows us well.
Yep.
He knows we know what we're talking about.
Yeah. So agent, if you're listening, you owe us a case of wine for the number of sales we've helped you with.
Yes.
Probably the other way around.
It's about building relationships so you can have those frank conversations without antagonising them and making them feel like, that they're doing the wrong thing.
And it's a two-way street, right? The agent could come back and say, no, here's my evidence.
Yes.
Because a good agent is also very ingrained in the market, right?
That is correct.
Yeah. But ultimately, given that we've had a fairly strong run, most vendors initially have their heads in the cloud in terms of the dollar figure or psychological figure that they have in their mind.
Very much so. So a lot of the times I will look at a property and I will ask the agent, can I have some comparable sales just to make these figures stack up. But sometimes it is just a case of sitting and waiting for the vendor to get their head out of the clouds, because we will assess a property and work out how much it is we are prepared to pay for it. And it may take 6 weeks, 2 months, just sitting there waiting for that to happen.
For them to be realistic.
To be realistic. And 9 times out of 10, that's going to happen because there is no sales to support what they're actually asking.
So you're in your daily work, right? You deal, of course, with the agents, and you also deal with the beautiful clients of RPG. there are always lessons that we can teach them and lessons we take off them as well. And often it's a matter of teaching them to look at things differently.
Yes.
And the missed opportunities, right? What are some of the opportunities that really stick out in your mind?
So I can, a recent one where the investor decided that he wouldn't buy the property because he was looking at how much the vendor had made out of the property. Now, he can't look at a property like that. That is somebody's good luck
and hard work.
Or hard work. But what he's made out of the property has got nothing to do with what he should be looking at, the opportunities that it's going to present him. So, people sort of get caught up in, and I have actually seen this quite a few times, where people are looking at how much money somebody else has made out of it, and they think, oh, well, if he's made, that's not fair. I want some of that, so I want to pay less for it. So I have had that quite a few times, and I have to say I've had that twice in probably the last 2 weeks. So, and the other thing is people get caught up in what they hear in the media. So negative media, if the media is talking about an area to buy, by the time it reaches the media, it's generally too late.
Yep.
And the other thing is getting caught up in data. So, with the internet today, there is so many opportunities to pull any data that you want, but most of the data is old.
Yeah.
So we're working on the ground every day, and what's happening on the ground is often way different to what the data is showing.
Yeah.
So, and core logic is a typical example where, you might run a valuation on a particular property. Well, the valuation is just a general valuation of the properties in that area. They can't take into account, is it subdividable? Can you do something, what you can actually do with that actual block? It's not really comparing apples with apples.
Yeah, absolutely. And you've made several points there that I want to explore further, right? So one of them is that people get caught up in how much the vendor's making. Now, years ago, that wasn't an issue because the data wasn't readily available, right? And this is where too much information is very dangerous, because now you then caught up with how much the vendor is making, whereas you really should be focusing on how much you can make and how does this property take you to your goal. And if we bring it back to that, then you're really safe in the journey. Yeah. And then the data bit where you mentioned core logic, which some of us older folks know as RP data. The data is very lagging, right? And you can massage the data to say anything you want at the end of the day, because there's so many different feeds, there's so many different ways to look at it, and the statistical variations of it. A really good example is that if you do one of these automated valuations, which is freely available on the net these days, it may not take into account that it's actually got a secondary dwelling on it, and it'll just value it as a 3-bedroom house. And now you're seeing that big discrepancy where it's sort of the value is saying it's $850, but the real market value is say $1 million because of the secondary dwelling. And this is where on-ground knowledge comes into account. And also equally importantly, a really good example is particularly in Queensland, where the property may be in the flood zone. So it's actually not worth what RP data is actually saying, core logic is actually saying. It's probably worth less. Yeah, just a difference between streets.
Yes, so it really comes down to, you need to look at the comparable sales. So, a typical example of what you were saying with it doesn't recognise the second dwelling. And a house and granny flat is a typical example of that. It might say that it's 5 bedrooms, 2 bathroom. Well, it's valuing a 5 bedroom, 2 bathroom house.
Yes.
Not something that's got a dual income on it.
Yeah. Or not something that's got a flood zoning on it.
That is correct. Or even in a bushfire zone. So, you really need to do your due diligence and look at your comparable sales. So just the run-of-the-mill sort of valuation that anyone can run on the on the net is 9 times out of 10 is not accurate.
It is not, yeah, it is not. And This is the danger also of you using the bank and they're doing a desktop valuation when they're revaluing your portfolio, because it could go in your favor, right? But more than not, it goes against you because you really want a walk-in valuation on your properties.
That's right.
Yeah.
Yes.
So as we developed the portfolio, as you're helping our clients develop their portfolios as well, we obviously chasing the market in terms of the different cycles. So the types of properties we're buying in each state is different because of the different phases in the market, right? So I guess it becomes hard for us to then continually coach the client to say, forget about what the media is saying. This is real truth on the ground, right? And the biggest thing I've learned over the years is that we really need to identify that the journalists are experts in journalism, not property.
You'll find that most stories that are in the media and everybody is talking about are just that, stories, and the media making a story.
Yeah. Because the headlines sell.
Because headlines sell. It's not necessarily the truth is there, but often it's sort of the truth is bent just to make the story.
Yeah. Sort of makes me think about the tagline about X-Files. For those that are young, maybe just Google X-Files and you'll know what I'm talking about. But so when we're looking at a property, right? So regardless of which state it is, and regardless of which client it is for, because we're client specific, right? We go and find the property for the client, not find the property and find a client, right? So we do it in reverse.
Yes.
Unlike a lot of other players out there where they're finding the property and then find the client. We do it in reverse, which slows our process down quite a bit because we're then very bespoke in terms of the portfolio we put together for that individual. But what are some of the key things we look at when we're looking and evaluating at a property?
So we really need to look at what the strategy is first. Strategy, price point, how much people can afford out of pocket each month. That's really important.
This is before tax. Yeah.
This is before tax. You should never ever buy a property on what you're going to get, in tax returns, because that can change at any time.
Yeah.
So, sort of their serviceability is really important. The yield, the property has to make sense, really, to the client's portfolio, because there's a stage where we're putting different types of properties into that portfolio. So we're looking for a particular type of property, and it needs to fit within those parameters.
Yeah.
It's not making a client talking a client into something that they don't need just because it's available.
Yeah.
It needs to fit.
Yeah, so the parameters are very, very narrow.
Very, very narrow. And that, it takes a lot of time. A lot of time goes into the research, looking at the property, making sure that it does fit within their parameters. They're not overextending themselves. They feel comfortable with the purchase that they are actually buying, because at the end of the day, they're the one that's buying it, and they need to be, to be feeling comfortable that, yes, this is the property for me.
Yeah. And one of the things that we constantly talk about in the team meetings is that it needs to have the sleep at night factor for the client.
That is that is right. So, we don't want our clients to be thinking, well, they can't live their life as they want to live it, or they're going to be eating baked beans or 2-minute noodles for the rest of their life.
Yeah.
Because if they overextend themselves, it is going to impact their lifestyle too much. It will create friction within the family. There'll be marriage breakdowns because there's sort of one person has one idea and one person has the other idea, but it just becomes too much.
Yeah.
So sleep at night factor is really important, and I really understand that from my own property investing journey. Sometimes, yes, it is tough, and you have to pull your horns in and pull your spending in just to get through some tough times. but you really need to be knowing that, well, if I take this property on, I can still live my life how I want to live it.
Yeah. That's right. Of course, if you're overspending to begin with, you shouldn't be investing, right?
That is correct.
Yeah. So baseline needs to be set
Yes.
first. Yeah. When you look at clients and their journey, every now and then I get this phone call from you saying, "I feel really good. I talked this person out of buying this property."
Yes.
Yeah. So
Yes.
what take me through that process.
So sometimes people have in their eye, and the media has got a lot of responsible for this. They get sort of in their mind that, this is a really good area to buy because it's got a really high yield on it. And I'm going, yes, it might have a really high yield on it, but where is that property located? And how is that going to get you to the goals that you're trying to achieve? Now, there is no point in buying a property in the middle of nowhere that's never ever going to get capital growth. But they are sort of fixated on the fact that it might have an 8% yield. Well, it might have an 8% yield, but what is that going to achieve for you?
Yeah.
It is just not. So if it doesn't make sense, there is no point in putting it in the portfolio just for the sake of it, or just to say I've got 10 instead of 9 properties, because it's not how many that you put in the portfolio, it's what the opportunities that are there. You might have to only buy 5 properties to turn it into 10. You don't need to buy the 10 properties. So people get really fixated on how many.
Yes,
and
that's
not
right.
what is.
Yeah.
And every property in that portfolio has a job to do. So I think actually the very first property that I bought with Right Property Group, that actually enabled me to pay down my principal place of residence. That's what its job was to do. So, you don't just buy willy-nilly. There needs to be a bigger picture.
Yeah, so you're buying towards an outcome.
An outcome.
Yeah,
yes.
right.
What do I want? Why am I doing this?
Yeah. And what does this property do in what I want out of the whole portfolio, right? And I agree, this is where people get caught up in the numbers game and as to how many properties they're buying and where they're buying as well is really crucial, because we look at it from a age perspective. We look at it from a cash flow tolerance perspective, so how much money they can afford to chip into the portfolio to hold it for the medium term at the very least, because we do reviews annually. And then also looking at it from ease of implementation point of view, right? If you are extremely busy, have got absolutely no time, or living overseas for that matter, we've got quite a few investors that live overseas. The type of property you buy is different to someone that's handy, that has got the skill set to actually do some work, drive to Queensland and spend 2 weeks and renovate a property. They're different. So it's very bespoke, and it's not where the trend's heading, a cookie cutter method to say, hey, buy in Perth or buy in Queensland or buy in Melbourne or New South Wales. It really comes back to what we're trying to achieve, where the market is, and what's happening career-wise and age-wise, right? Because as you get older, the properties become very, very exact in terms of what you need to buy.
That's right. So, recently I had a client that was fixated on buying in New South Wales, and I showed him an off-market opportunity in WA, and he was so fixated as I had $1 million to spend, and I want to spend it. But just because you've got $1 million to spend, it doesn't mean that is the right purchase for you.
Yep.
I can show you a property that's going to be $200,000 less, but has way more opportunities for you. And it's going to benefit, this property here will benefit you more in the long run than spending your $1 million in New South Wales just for the sake of buying in New South Wales.
Yeah.
So this property had 2 titles on it, 2 separate titles. He could sell them off separately. Plus, it also had extra land on the back of it that he could do a boundary readjustment, and then he could either build something on the back of it or he could subdivide. It had way more opportunities than just spending $1 million in Sydney on a buy and hold.
Yeah, and this was in a market that's potentially peaking, right? So
Yes.
it was the right type of property to buy there for that market.
That is correct. And we were buying it off market, so we weren't buying in an over inflated price.
Yes.
So once I sat down and explained to him, well, this is what you're going to achieve by buying this property in New South Wales, opposed to you can buy this property in WA. It took him quite a few days to get his head around it,
Yeah.
but finally he could see the opportunity, and he got over the fact that he was only going to spend 800,000 rather than his million.
Yeah. So being flexible as an investor is really important, right? So, look, we could continue talking about things forever because there's so much that you can bring to the table in terms of your personal experience and those experiences that you've gleaned through clients and helping clients. But in the interest of time, I would ask, what's one thing that you would advise two parts to this question, right? What's one thing that you'd advise a novice investor, someone that's just starting, and then taking the same question to someone that's already got a small portfolio happening? What's the advice you'd give them?
I think the answer is really the same. Is for the novice really is start as soon as you can.
Yep.
But you really need to surround yourself with a good group of people that really know what they're doing. You need a good broker, you need a good buyer's agent, you need a good solicitor, so that you've got a network of people around you, because it makes that sleep at night factor so much easier, because you're not just sort of, going out there willy-nilly sort of trying to work out where and what I'm going to buy. If you get expert advice, you've got a really good chance of getting it right.
Yeah.
Because getting into property is very easy, but if you buy the wrong type of property, it's a lot harder to get out of a bad purchase than it is to get into it.
Yeah. Sounds like you've been listening to a few podcasts. No, all good. Look, fantastic. It took me a while to convince you to share your knowledge to the general public, and I'm really grateful that I've got you as part of my team. No pay rise.
We'll talk about that later.
Help. But for the listeners, if you've enjoyed this, please don't keep us a secret. Hit the share button or introduce someone to this podcast. And until next time, bye-bye.
Goodbye.
The information featured in this podcast is general in nature, does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you.